You know that feeling when you're just drowning in information? All those articles, reports, maybe your own scribbled notes, and you just wish someone, anyone, could just sift through it all and hand you the real gems.
Yeah, pull out the gold nuggets.
Exactly. Well, that's pretty much what we're aiming for today.
Yeah.
We're doing a deep dive into something truly dynamic. I mean, it's evolving so fast. The past, present, and crucially, the future of cryptocurrency and blockchain technology.
And our mission here really is to cut through all that noise. We want to help you understand how this tech has evolved, for sure. But also, maybe more interestingly, why certain parts of the world might actually be positioned to lead its adoption.
Which is fascinating.
It is. And then, looking ahead, what does the global regulatory picture look like as we head into 2025?
Yeah, it's a journey that touches on, well, almost everything. Financial systems, the future of education, even things like national identity. The goal is simple. Give you a shortcut, a way to get genuinely well-informed on a topic that's frankly reshaping things around us.
So let's unpack it.
Okay.
Let's start at the beginning, or near enough. Bitcoin. Its arrival was revolutionary, wasn't it?
Absolutely. By, 2013? It had really cemented its place. Billion-dollar market cap, exchanges popping up, infrastructure building
It
out.
was clearly here to stay.
No doubt. But, and this is key, Bitcoin, in its original form, it had some inherent limitations. It's a bit like the very early internet, you know?
How so?
Well, you had static web pages back then. Text, images. Simple stuff. You couldn't really build an Amazon or a Facebook on that first version of the web.
Right.
Similarly, Bitcoin was mostly designed to do one thing. Move Bitcoin, the asset. It wasn't built for, say, complex contracts or cold payments transactions happening offline.
Okay, so a powerful start but limited. How did the industry move past that? That must be where the second generation comes in. Exactly right. That next wave brought what you could call the programmable web to crypto. Think of it like JavaScript arriving for the internet.
Adding the dynamic layer.
Precisely.
Yeah.
Suddenly you see the possibility of smart contracts emerging. Then NFTs, security tokens, and this whole huge ecosystem we now call DeFi, decentralized finance.
It really broadened the horizons for what blockchain could do.
Fundamentally. But that progress also brought its own set of pretty major challenges. People often talk about this three-dimensional problem.
Okay, let's break that down. What were these big hurdles?
So the first dimension is scalability. You build a system for maybe 1,000 users. What happens when 200 million try to use it?
It breaks. We're slows to a crawl.
Exactly. It can sort of buckle under its own weight. Resources get scarce, costs go way up. You need fundamentally different underlying protocols to handle that kind of scale.
Makes sense. Dimension 2.
Interoperability. Okay, so there are, over 8,000 cryptocurrencies out there now? Maybe more?
A lot, yeah.
But there's no real Wi-Fi moment yet. My phone, Samsung, Apple, whatever, connects to any router anywhere. Seamless.
Right. Doesn't matter who made the router.
But in crypto, getting different blockchains, different assets to interact smoothly, easily across platforms, that's still a massive challenge.
Okay. Scalability, interoperability.
Yeah.
What's the third dimension? This one feels less talked about sometimes.
Yeah, it's sustainability. Think about it. In a truly decentralized system, who pays for the ongoing work? The development, the upgrades, the maintenance.
Good point. There's no Microsoft charging for Windows updates or Apple managing the iPhone ecosystem.
Precisely. You need solid decentralized governance models. Ways for the community to fund and direct the evolution of the system so it stays useful and secure long-term.
So facing those three big challenges, that leads us into the third generation of blockchain.
That's the idea. Projects like Cardano, for example, are explicitly designed to tackle these three things head-on. They're trying to build systems that are scalable and interoperable and sustainable while still keeping the power of smart contracts and decentralization.
And what strikes me about this third generation, especially using Cardano as an example, is the sheer rigor of the approach.
Oh, it's way more complex under the hood. They're using a very scientific, peer-reviewed methodology. I think Cardano has something like 117 papers published now.
Wow.
Yeah, it's aiming for a level of auditability and security you'd normally associate with, like aerospace engineering. High-stakes stuff.
Because the failure modes are potentially catastrophic.
Exactly. This code isn't just for fun digital collectibles. It's being designed for potentially millions, even billions of people. And it could end up managing fundamental parts of their lives, identity, property, not just money. The engineering has to reflect those high stakes.
Okay, this is where the story gets really interesting, I think. Because usually we assume new tech, especially complex stuff like blockchain, takes root first in Silicon Valley, maybe Europe, maybe China.
The usual suspects.
Right. But the argument here is that the developing world is actually poised to lead this adoption. Why? What's driving this sort of counterintuitive trend?
It really does challenge our assumptions, doesn't it? The core driver is just the sheer urgent need for better financial systems in these regions.
Need being the mother of invention.
Pretty much. You've got billions of people who are completely unbanked or severely underbanked. Basic things we take for granted.
Like sending money.
Yeah, sending money, home remittances.
Yeah.
That can cost 8%, even 10% per transfer. Lending. Interest rates can hit like 72% a year in some places. Insurance often just doesn't work or isn't available.
So the existing legacy financial system is just too expensive, too clunky to really serve these economies well.
Exactly. It's often just not economically viable to integrate the old systems. And this is where blockchain has a kind of superpower.
Okay, what's the superpower?
Its ability to replicate really sophisticated functions, things currently done by big institutions like SWIFT or the banks themselves, but as open source software.
Meaning
It's expensive to create the initial protocol, sure, but once it's built, it can be deployed and run almost anywhere at a tiny fraction of the cost. There's an analogy sometimes used, like a smart cow that figures out how to open the fence. Only one needs to figure it out, then all the others can follow.
Huh. I like that. One person writes the code and suddenly everyone can use it.
Basically, yeah. It becomes a universally usable tool.
And that connects to this idea of the clean slate advantage these economies have, right?
Absolutely. Unlike, say, the US or Europe, which are heavily invested in their current financial infrastructure, trillions of dollars sunk in and have layers upon layers of existing, often protectionist regulation.
Developing economies don't have that same baggage.
Exactly. They have this opportunity to innovate, to build new systems from the ground up without being slowed down by legacy infrastructure or legacy regulations.
It's like how many parts of Africa skipped landline phones altogether and went straight to mobile.
Precisely. That leapfrogging effect. They didn't have to worry about ripping out old copper wires.
Yeah.
The same applies here, but for financial and even regulatory systems. It allows for much faster, more agile adoption.
Okay, let's make this tangible. Abstract ideas are great, but where is this actually happening? Ethiopia's Educational Credentials Project is often cited. What problem is that solving?
It's tackling a really fundamental issue. Trust and efficiency in verifying diplomas. Think about it from an HR perspective. Someone gives you a degree.
How do you know it's real? And quickly.
Exactly. Traditional verification can take weeks. That puts job seekers, especially those needing work urgently, at a huge disadvantage. Even a Harvard degree can be slow to verify sometimes.
Right.
So by putting credentials on a blockchain, they become immutable, unchangeable, auditable, transparent. Verification becomes almost instant and super cheap. And this can cover everything from K-12 up through university.
And critically, you mentioned this doesn't need everyone in Ethiopia to have perfect internet all the time. It uses a hub and spoke model.
That's right. Key places, universities, government offices, major businesses need connectivity to anchor the system and do verifications. But individuals can hold and share their credentials offline asynchronously. It doesn't require universal broadband tomorrow.
Okay, so once you have that digital backbone for credentials, what else can you build on it?
That's the beauty of it. The infrastructure is reusable. Think about professional licenses, lawyers, doctors, accountants, government certs, private ones, all managed on one verifiable system.
Utility payments, you mentioned, those can be a hassle.
Oh yeah. In Ethiopia, people might literally wait hours in line to pay their power bill.
Yeah.
And if the payment isn't logged correctly, bam, power gets cut off. Digital payments running on this kind of infrastructure solves that instantly.
It really sounds like it could touch almost every part of civic and economic life. Supply chains, national ID.
Voter registration, absolutely. And perhaps most profoundly, identity and property rights. Land titles, water rights, mineral rights. These are huge sources of conflict and inefficiency globally. You know, in some South African townships, land ownership is basically oral tradition because transferring official titles is just too expensive.
Wow. So blockchain could provide a clear, verifiable record.
An indisputable record of ownership. And beyond that, think about credit scoring. Building a reputation, a credit history, is incredibly hard if you're outside the formal financial system.
Which locks people out of loans, student loans, business loans.
Exactly. These digital credentials, tied to a digital wallet, can become the foundation for building that reputation, enabling access to a whole new digital economy.
And starting with education credentials seems like a smart move politically. It's hard to argue against making diplomas secure and easy to verify.
It's a pretty non-controversial entry point, absolutely.
Right.
Everyone agrees it's a good idea.
Now let's touch on connectivity again. You hear figures like maybe only 10–30% internet penetration in some parts of Africa currently. Isn't that a fundamental roadblock?
We tend to think of that as an ephemeral problem, meaning, yes, it's a challenge now, but the trend lines are clear.
What do the trends show?
Well, big consultancies like McKinsey predict over 95% of people globally will have cell phones within 10–15 years. And these aren't just phones anymore, are they?
They're pocket supercomputers.
Exactly. And they're getting cheaper, easier to refurbish. The cost of computing power and connectivity just keeps dropping, while quality and access keep rising. You even have innovative projects like World Mobile in Zanzibar building community-owned 5G networks. Connectivity is getting solved faster than many people think.
That vision of transformation is really compelling. But, you still hear skepticism, especially maybe from folks in developed countries. The argument goes, developing country governments don't have money for fancy blockchain projects. They need roads, schools. They see it as a luxury.
Yeah, that's a common perspective, but I think it's often a very, a Western-centric view. It kind of misses the strategic point. It's not really about whether governments have any money. It's about priorities. What's the job of a policymaker? It's to invest in the things that will create jobs and make their country competitive in the 21st century, not just maintain the systems of the 19th or 20th.
So you're saying blockchain isn't just some add-on, some nice to have. It's fundamental infrastructure for a modern economy.
Absolutely fundamental, like roads, like electricity, like the internet itself. Think about the potential returns. Any investment that can demonstrably boost your country's credit rating, strengthen the rule of law, attract foreign capital, create jobs, boost tourism, speed up money velocity, stabilize the currency, make voting and land ownership more legitimate, earn international respect.
Those are all massive benefits.
Huge, and all things blockchain infrastructure can contribute to. Look at Rwanda under President Kagame since '94. They made incredibly proactive strategic investments in improving their systems, governance, tech. Kigali now, in many ways, feels like a European city. That didn't happen by accident.
That's a powerful case study. So it's not about affording it, it's about recognizing the potential payoff, the bang for your buck.
Exactly. It's potentially enormous. You might spend millions to generate billions in terms of economic growth, stability, and opportunity. Countries just focused on basic, old-school infrastructure, frankly, they often don't attract the kind of modern investment needed to really strive today. When I talk to heads of state, the conversations aren't just about how do we get more cell towers. It's about how do we use AI, IoT, blockchain, these fourth industrial revolution technologies to transform education or healthcare and compete globally?
So it's seen as essential for future competitiveness.
Absolutely. Blockchain enables this open, verifiable environment for facts and circumstances. That attracts investment, it attracts venture capital, it fosters a fairer society. It's an investment with potentially outsized returns. #tag navigating the global regulatory landscape 2025 trends.
Okay, so as this technology matures and spreads, the regulators are definitely paying attention. It feels like we're at a real turning point, right? A shift towards clearer rules.
Definitely. There's a growing consensus, I think, that we need rules that balance encouraging innovation with protecting investors, ensuring financial stability, and maintaining market integrity. It's a tricky balance.
So looking ahead to 2025, what are the big global regulatory trends we should be watching?
Well, first off, stablecoin regulation is really intensifying everywhere. Regulators are taking a much closer look, developing specific rules to make sure they're reliable, properly backed by reserves.
The EU's MiCAR framework fully covers them now, doesn't it?
It does. And you're seeing major proposals being actively discussed in the US, the UK, across Asia. That's a huge focus area.
And alongside that, I assume, is a continued push for stronger anti-money laundering, AML, and transparency.
Absolutely. Governments are definitely tightening those rules. The FATF travel rule, that's the one requiring crypto service providers to share sender and recipient info, like banks do, is being implemented more widely.
To bring crypto standards more in line with traditional finance.
Exactly. But it's important to note, progress is uneven. A recent survey showed something like 75% of jurisdictions are still only partially compliant or not compliant at all with FATF's virtual asset guidance.
Wow, 75%.
Yeah, and nearly 30% haven't really implemented the travel rule yet, so significant gaps remain globally.
What else are regulators focusing on?
Data governance is another big one. Stricter requirements around how data is stored, secured, accessed. trying to mitigate fraud and cyber risks. We're also seeing more integration with traditional finance rules, allowing banks to custody digital assets, offer blockchain services, that sort of thing.
And DeFi, decentralized finance, that must be on their radar too.
Oh, definitely. Regulators are actively working out how to extend oversight to DeFi platforms. They're generally applying that principle of same risk, same rule. So looking at DeFi lending, decentralized exchanges, and figuring out how existing financial principles should apply.
Okay, let's talk regions. The US seems to be undergoing a bit of a shift, moving away from just regulation by enforcement.
That seems to be the direction, yeah. A more crypto-friendly stance appears to be emerging. Lawmakers are revisiting bills trying to clarify who regulates what, the SEC versus the CFTC, that perennial question.
And there's talk of staked ETFs being approved maybe in 2025.
That's the expectation in many circles. If that happens, it could really accelerate institutional money coming into the space. Add to that an executive order explicitly saying no to a U.S. central bank digital currency. It signals a clear preference for market-driven stablecoins. This whole shift could position the U.S. to really influence global policy again.
Interesting. Meanwhile, across the Atlantic, the EU has MyCar fully operational now since December 2024. That's a big deal.
Huge. It creates a single unified framework across all 27 member states. It covers authorization, transparency needing white papers, strong consumer protection like segregating client assets, rules against market abuse.
It's comprehensive.
But there's a transition period.
Right, there's a grandfathering period until mid-2026 where firms can still operate under their old national licenses. The twist is some EU countries have set tighter deadlines or stricter rules during that transition.
So still some fragmentation, even with a unified framework coming.
A little bit, yeah. It'll take time to fully harmonize in practice.
And what about Asia? It feels like several hubs there are really leaning in.
Definitely proactive. Hong Kong SAR, for instance, is really stepping up. New licensing for exchanges, strict stablecoin rules, aiming to be a major regional hub. Singapore's finalized its stablecoin framework, too.
And Japan seems particularly forward-thinking.
Very. They're actively promoting Web 3.0 as a national economic strategy. They're not just researching use cases. They've even given legal status to DAOs, decentralized autonomous organizations, treating them like LLCs. That's quite groundbreaking.
Wow, DAOs as LLCs. Okay. And the UK?
They're also moving forward with their own extensive regulatory framework covering crypto assets and stablecoins. Full implementation is expected sometime during 2026.
So lots of movement globally. Any other jurisdictions worth highlighting?
Yeah, several others are quite proactive. Bahrain was an early adopter. Gibraltar's had DLT regulations since 2017. Liechtenstein is very blockchain friendly. Switzerland applies same risk, same rules, and has specific DLT licenses. And the UAE, particularly Dubai and Abu Dhabi, is actively working to become a major global virtual asset hub. So, yeah, a lot happening.
This has been, well, quite the journey. We've gone from Bitcoin's early days through the rise of smart contracts, the challenges of scaling,
to the potential of the third generation.
Right. And explored why the developing world might surprisingly lead the way, looked at real-world examples like Ethiopia,
Tackled the funding question.
and finally navigated this incredibly complex but slowly clarifying global regulatory map.
It's a lot to cover, definitely.
It really is. And maybe a final thought for everyone listening. As this digital infrastructure, this blockchain layer, becomes more foundational, consider that it's not just about faster payments or digital collectibles. It's potentially about redefining really fundamental concepts.
That trust.
Ownership.
Exactly. Trust, ownership, opportunity. It feels like it's paving the way for potentially a much more level playing field, a more universal system.
A fascinating possibility. So the question really becomes, as this digital frontier keeps expanding, what new possibilities will you discover?